start by marking a major area of support or resistance, such as these swing points near the gap down area. Then draw a Fibonacci channel that will have at least some of its levels eventually running through these areas. And in theory, just like intersections with other diagonal lines such as trend lines and Fibonacci fan levels, more significant events such as these large upswings are more likely to occur at those intersections where the Fibonacci channel lines intersect with those support and resistance levels we drew earlier. And of course, realistically, not all major events will be covered by these intersections, and there can be some variation between the exact location of these intersections based on where and how you choose to apply the Fibonacci channel. The exact same statements could be made, except now within the context of this uptrend. And like with some previous examples, the trend lines identified by the Fibonacci channel can still be useful even after price has briefly exited the channel. Even with such great results like this, where major upswings, downswings, and continuation areas are identified by the intersection of channel lines and regular support and resistance levels, it is more realistic to expect the majority of movements to take place near the intersection rather than exactly on it. Because even if a major swing point like this doesn't exactly happen on the intersection, the candles that form it will often touch both the price level and the Fibonacci channel level that are related to the intersection.